Hello everyone, this is Modified Darvas Box coming at you here after the close on December 8th. And I decided I wanted to make a short video called Making a Market Hypothesis. The reason why is I believe it's very important to come up with a template in order to judge the market action against. Before we get into it, let's just a quick housekeeping. I'm an individual investor who's been doing this for 23 years. I created an investing and trading system based on the book by Darvas, How I Made $2 Million in the Stock Market. I believe only 3 states of trend exist: uptrend, downtrend, and sideways. An example of a bullish Darvas box pattern is over here in the upper right. An example of a bearish Darvas box pattern is here on the lower right. And the thrust of my strategy is I'm trying to transact when the trend changes. However, I do have other little tips and tricks I've learned over the years that I implement as well. But this is the core of my strategy. All right, so let's get into this video about making a market hypothesis. So basically what you're looking for is, it really comes from news flow, but you're trying to come up with a general a hypothesis or template which can talk about, what's going on in this market period. For example, it's usually maybe the Federal Reserve, and that's been the recent one, which is the Fed raising rates or economic slowdown. Other times it's about maybe good news, maybe good corporate earnings or something. But you just want to come up with an idea of what might be the dominant trend in the market. Now here's an interesting thing which I tweeted the other day. So the dominant trend up until recently has been the Federal Reserve is going to raise rates. And that's going to cause the market to take a tumble. Well, if that's the dominant trend and that's the hypothesis, then you can gauge the market action against it, and that can help drive your decision making. An example of this is if you see all this bearish bad news, but on your charts you see big green volume buying bars coming in, well, now you know something's wrong, something's changing. What you're doing is you're looking for that variant action. So here on the Twitter, I posted that I think a bear trap has been strung on the shorts because the dominant hypothesis trend has been negative, and we've seen some really positive market action. So I think a trap has been sprung on the bears, and now they're stuck. So at the moment, that's my new hypothesis. And now I can gauge the trading action against that theory. And by the way, hypotheses always change, but it's just trying to come up with something which talks about the dominant trend. So let's get into what I mean. Let's look at the SPY. Dominant trend. So this is what I mean by it. So I talked about this. We saw all this bearish action in here. But then a funny thing happened. The selling stopped, and right here, all of a sudden it disappeared. But what did price do? Price moved up. We gapped up, and now the bears can't seem to push price down anymore. And this is why I think the bears have gotten stuck. Everybody was so bearish. Everybody's expecting a downtrend here in this negative selling zone. Not only is this regular sellers, but there's people shorting into it too. And then what happens? You get a big gap up. Now they're stuck. They're hooked. This blue line here is what I call the hook level or a pivot. And it's where now they're losing money. And what do? How do you get out of this trap? Well, there's only 2 things they can do. They can cover and throw in the towel, or they can be stubborn about it and get squeezed by the longs a bit more, and that may result in far higher prices. The target I've come up with is 488 for the SPY for where it's going to go, and that consists of the low, it's the range of the low high. So you take this measured move here, you calculate out whether it's going to be this hook level to the low, etc. And then you can come up with a target and say, okay, that measured move is going to end maybe somewhere in here, maybe by around Christmas time, maybe by the end of the year, who knows. But that's my hypothesis, because I see a bearish news trend, but bullish trading scenarios. And here, let's see another one here. We can see here on the QQQs, the same thing. The bearish selling down here, then the bullish gap up right there. And that got everybody probably shocked to bears. I was shocked as a bull. I was shocked to see that, to wake up to the big giant gap. But yeah, imagine if you short this market and you short it in big size. What do? Well, you're stuck. And many times the big institutions or hedge funds that put on that bear trade, well, maybe they're looking at it as, yeah, but the Fed's doing all this bad stuff. We're good. We're good. No, you're not good, because you're not looking at market action. So the hypothesis which they used was bearish, Fed, etc. And that was correct up until Friday. Then Monday, it started turning, and now again, they're stuck. So that's how you make a market hypothesis, and then you judge the trading action against it. And when you see the divergences, that tells you that something's not quite right, and maybe you should, change your point of view. So that's my little video here on making a market hypothesis. Hope you enjoyed it, and we'll see how this plays out. Okay, thanks. Have a good one. Bye-bye.